la la. Boom, shalakalaka. All right, you should have all the pretty colors. Good morning. I guess it's just after 7 a.m. on Wall Street, about what, 2.5 hours before the open of trading. It's time to get our global macro on and uncover the best fundamental opportunities. Yeah, we're going to look at all the macroeconomic data, but we're also going to look at all the short-term sentiment indicators, and we're going to try to find congruency. What does that mean? If the trend is up, we want to buy dips. Yeah, it's just that easy. Uh-huh. Yeah, so anyways, it's middle of the week, so we don't have to do things like institutional positioning. We don't have to do our central banking forecast, but we will look at the real-time sentiment indicators. And in theory, there just might be some more additional updates that have happened overnight, because there's a lot of cool things going on behind the scenes. But the bottom line is we got to look at reality, which is what's happening now relative to what QuantBox thinks should happen. And then you organize all your thoughts, the things you might buy when confirmed with technical analysis, or the things you might sell when confirmed with technical analysis. But all of this is created on logic. Imagine the confidence if your trades were based on logic and intelligence. Hey, man, it's a grind. It's a struggle. This is what we do all day, every day, and it never gets boring. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Boom, boom, boom. Boom, 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 boom. Boom, 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 boom. The lighting's weird, huh? Let's see if I can improve the lighting a little bit. Is that a little better? No, not really. Let's move this over here. Yeah, not much. But anyways, we'll go with it. All right, so let's just dive into the pro. Boom, boom, QuantBox. All right, let's dive into the QuantBox. Boom. All right. Coolio. Very interesting. So I'm looking at things here. They've changed order a little bit, I think, but euro dollar still very bullish. Pound dollar, very bullish. Tax, okay, that's good. So look at all the European currencies. And then gold. Okay, gold at 2,400. Remember, we're in this period of slowing growth and stalling inflation, but stalling at a higher price. And that usually pushes you toward metals. And there's like when you look at USD Rand down, USD Swiss franc down, USD CAD down, that's typically risk on. Yeah. Taking a look at the world here, we did pop above 4.5 yesterday, and that had to do with a 2-year auction and a 5-year auction. And I mean, like, it's crazy when we're talking about a debt problem. Like the 2-year auction yesterday was the biggest 2-year auction in the history of the United States. That, my friend, is called debt. You're like, what is that? Oh, that's debt. Yeah, that's debt. And then the 5-year wasn't well received, meaning the people that invested in and lent money to the US government demanded a higher interest rate because they don't think the Fed's going to cut. So anyway, so yields went up yesterday quite a bit, and that's bad. Okay, but it happened. Okay, it happened. So the 2-year and the 5-year, and I think we got another 2-year auction coming up. Like a lot of debt, my friend. Okay, oil strongly above 80. We worked on that all last week. Okay. Triple bottom, now a higher high. Nice. Could be a trend. Gold stuck, S&P 500 stuck. But the big story there is yesterday, NASDAQ went up a bit. S&P 500 was basically flat, but stayed above its psych level. And Dow tanked. We know they're much different, and the technicals are much different, but there was a time when the Dow yesterday was down like 330 points, and NASDAQ was up. Much different companies, much different situations, much different maturities. So in the NASDAQ, you have growth companies, and when you look at the Dow, they're monopolies of one form of another, and they benefit or get hurt differently, right? They are different, and that's why we separate them. So quite a divergence right now, actually. And then euro dollar flat, and Bitcoin's still down. Taking a look at today, we have a put call ratio here of what? 0.88. Neutral is 1. Is that good or is it bad? That's good. You know what? This is too close to the edge, huh? I'll do this maybe tomorrow. I'll move this over just slightly, so it's a little bit easier to see. So that's a little bit of risk on, 0.88. That's good. Risk on. Green, down, green, good. Over here, this is the 2-year, right? This is the options trading market. This is the Treasury, and like I said yesterday, was a big 2-year auction, and well, yields are still, at this level, almost 5 or getting very close to 5, right? Holy vey, I get that right. 4.94 above the 8-day moving average, and that's bad. So that's risk off. So the options traders are risk on, the Treasury traders are risk off, and that will probably move us towards some sort of neutrality. You can see her right now. We're 2 ticks to the risk off. So typically you're buying dollar, buying yen, buying Swiss franc. Well, we'll see if that is on other time frames. So we'll look at the risk gauges here. Okay, well, this page has not been updated. Too bad. All right, so we're still risk on the long run. Here's that 0.88. Okay, there's the 0.88 we saw on the other page. Okay, so that's a little bit of risk on. We're back to a 4. Remember, we were 4 all last week. Then yesterday we dropped to a 3. Now we're back to a 4. And mixed on the medium term and opposite on the short term. Yeah, be careful. But because this is risk on, you might look for dips. You're still a buyer. Is the beige book coming out today? I don't know, actually. It's the right day. I can tell you, it usually comes out on a Wednesday. Right? Yeah, don't know. Here's just a quick another look. Okay, when this is above the red line, risk off. Let's take a look at our world here. By the way, what do you think of Savannah, Georgia? It's it's funny because that's the river there, and it's cool because ocean going ships go by the hotel. I'm right on the water, best view of the you can get in Savannah, which means I'm looking at the river, and on the other side of the river there's a scrap yard. I'm like, what a beautiful scrap yard. Yeah. It's so funny. Oh, so funny. All right, so we're taking a look here. So look at the increase in yields. Holy schnicker schnacker. That's a bad day for me. Wah, wah, wah. Boy, we're printing debt. My goodness. So anyways, the 10-year is up. Okay, which is different than the 2. It's 10, but that is up, and well, that means money's more expensive. It'd be like waking up in the morning and finding out that your mortgage payment just went up. Do you like that? Is that good? Is that bad? You're like, wait, what? My mortgage payment went up? Yeah, get bad, right? We don't want that. What else? Looks like a lot of the metals have come down actually, which is interesting. And even QuantBox has them coming down. That's interesting. I wouldn't have thought that, but that's why you have to have the research. Okay, that's interesting. NASDAQ down, everything down, almost 1%. Like these are fairly big drops. Copper down and Bitcoin. Dr. Copper, platinum. Yeah. Okay, this is interesting. And that would lean risk off. Well, that's risk on. Interesting. Swissy strong, Swissy strong, Swissy strong. Dollar strong. So let's isolate some of this. Let's just do majors. Dollar strong, dollar strong, dollar strong, dollar strong, dollar strong, dollar strong, dollar strong. That is risk off. We're getting to the point where nobody believes the Fed's going to do anything this year. Okay, let's look on the calendar. Yeah, all nothing. Australian CPI is still pretty hot, huh? Yeah, pretty high. But one thing to always bear in mind, all these calculations are done differently. Do you know one major reason why inflation is lower in Europe than it is in the United States? Well, one way to figure that out is, well, why is the United States, or why does the United States have persistently high inflation? Why does the CPI not come down further? Well, it dropped from, let's say, 10% down to 4 or even 3.5 because we fixed the supply chain problem. Okay, well, that's what happened to Europe. But why is Europe 2 something and the United States is still stuck at 3 something? Well, the sticky part of US inflation are wages. Well, Europe has wages too, but it's the rent part. They don't do owner equivalent. Only the United States says, well, Jim owns his house and his house provides a service, and we're going to count that service toward, inflation. And so then the government tries to figure out, well, if Jim were to rent his house from himself, what would that rent be? And then include it. Europe's like, forget it. we can't do that in 27 different countries, Some people live in castles, some people live in teepees. I don't know, right? How do you go from yurt to castle and figure out the formula, right? So they don't even include it. There is no housing inflation in Europe. Well, what do you think if CPI doesn't come down? What do you think the Fed's going to do? Throw it out. They'll just say, "Well, the rent equivalent's broken. Get rid of it." Look, inflation came down magically. Yeah, but it is a problem. Like if it's a bad model, they might want to take it out because it's maybe impossible to calculate. Right? But my kids won't even listen to me. So why would the Fed? So forget it. I don't have to tell them. All right. So that's it. And then nothing except CPI or PCE on Friday. Big, preliminary GDP. Yeah, okay. We'll figure all that out tomorrow. Not too. I mean, this should be interesting. This is the preliminary GDP quarter over quarter. I mean, it's so early. It's so prone to revision. So I don't know. It might move the market, but it might not actually be that important. It'll just be a newsmaker, huh? Let's see. We don't need the COT. We don't need the central bank. We don't need any of this. Let's just. I want to look and see how far they are in the development work. Oh. Yeah, look how flat this is, huh? Better. Okay, institutions, look at this. 50-50 on both assets. And retail 70% short. They're out of position. Take a look at a couple of other things. How's our euro doing? Look at this though, huh? Look at the seasonality. Typically a drop until between now and the end of summer, or soon till the end of summer. Almost 60-40 institutional. 85% of institutions are short the yen. Well, that totally makes sense. So that makes this go up. But when you look at this pair, 69% of retail's shorting this already. Maybe they're onto something, maybe they're early. Let's look at the Dow. Dow just tanked yesterday. Boom. Well, if you can recall, like I can see the chart in my head, but if you recall, it essentially double top, lower low, lower high, 1, 2, 3, right? Hammock type to the down, and then it came back up and then it crashed again. It's behaving very, very technically. And we're precisely 50-50. How interesting is that? So that's the no diggity, no doubt. Notice that there's definitely a downtrend, a lower low, right, relative to that low, but also the linear projection is quite clearly further down. So, okay. Then we go to the S&P, and a bit of a different story. It's also mixed, a little bearish, but technically, right, we are still riding the daily 21 simple moving average. I can't do the EMA. I just don't know how to do it here, but I did simple. Hang on, I got to get my room service. All right. This is a strange hotel. They try really hard. So I ordered some coffee. I'm not complaining. Nice black coffee in a Japanese teapot. Okay. Okay, I'll make my little tea. Okay. I guess it's cool looking. Hey, let's serve it in a Japanese teapot. Oh, that's a great idea. All right, I'll put it over there. Oh, I can't. All right. Yeah, keep it hot, I guess. Yeah. Yeah, I guess so. It's just funny. I'm like, oh, it's a Japanese teapot. It should be green tea. But anyways, what's in Savannah? Came to visit David Pegler. He's been popping in lately. I'm like, dude, I haven't seen you for 15 years. Yeah. So we had dinner last night. So I apologize. My plan was to do our 4 o'clock here at the hotel. And let's just say it didn't go down that way. I'm really, really sorry. So if you want, when this stream is done, I'll run over to the swing trading group and we'll do it now before YouTube. And I'm a little worried if YouTube might not work. So I forgot to triple check my laptop for YouTube. I forgot about that. Google gives you a lot of problems because it's like we don't know where you are, so we need to, do 75 different ways to confirm it's you, and then I'll never be able to stream. That one's been a problem. But anyways, if you guys want to go to the other room and do our fundamental review, our week on the street, I'm happy to do that. Yeah. I don't have to go to the International Association of Former Male Supermodel convention. I don't have to do that until later. All right. So if you want to do that, I can. Oh, 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 oh. Yeah, I'm very upset. I'm going to have another stern conversation. I don't know. Does this add up to negative 14? No. Hmm. All right. All right. So, oh, they opened some of these. So what's trying to be displayed here is different parts of the job market. So I want to track, the weekly jobless claims. Trying to track non-farm payrolls. Here's the unemployment rate, but they're not amazing. The untitled section, that's interesting. What is that? Nothing. Um, I'm not a big fan of these gauges, but there's something. At least we can track the changes. But we have new tools being built to, I think, that could beat this, that are more traditional. So maybe by non-farm payrolls, what is that? Next Friday. By next Friday, we'll have tools that are doing this, but the standard sort of trend lines and stuff that I think, humans prefer to look at and not what developers develop. So, anyways, this was a first attempt, but we're already rebuilding all this stuff in a way that I think you'll like better. And since we're all tracking, the job market right now, that's important. So, The big thing here is I am going to remain a bull. Okay. Looking to buy a dip. Yeah, hang on, Miro. We got you. I've already sent it to the team. I'm on the road, so I haven't been able to, that's a whole different team. So right now I'm building up my agenda for later today and tomorrow, like yell at these people, yell at those people, right? Belittle these people, publicly humiliate these other people. And it's stacking up, right? So I'm running out of rotten tomatoes. There's only so much that can be done, but you're on the list, man. Yeah, they've already been sent. So someone should just be able to add that. You'd think it would have been done by now, but again, when the cat is gone, the mice will play. We got you though. We'll get you, Miro. Right. So this tells me sort of buy a dip, and this says it's dipping. The only caution is that you need to pay attention to, you know, do you buy a dip after a double top? I mean, after the double top. People always get freaked out. It's coming up to a double top. Well, that's going to happen almost all the time in your career. If you're buying a bullish trend, if it's making a higher high, it's always going to approach the previous high. So it's more like, when do you freak out? After the double top is formed. Okay. So look, I want to buy a dip. This is how I'm reading these charts. I look at it, I'm a bull long term. Right now it's down. Cool. That's probably a good time to buy. Now, if I go to my charts and then I see, is it a good time to buy? And I just notice it's already double topped and dropped. Well, that's not a good time to buy. You know your technical analysis. Okay. Is it on the daily 21 EMA? Okay. Right? That kind of thing. Are you riding the moving average? Okay. Then that's what we want to look for. Remember, strategically, I like to toggle between the daily and the 4 hour. So I'll check the daily. How far away is the 21? Great. Go to the 4 hour. Okay. Look at the angle and separation between the 21.55. Is it bullish? Am I buying these red candles? Where's my price? Okay. When I get close to that price, then you drop to a smaller time frame, and now it's just like, well, what time do I buy it? We're near my price. So I know I'm in the zone. I know I want to buy. It's been down for a period of time. Great, because I buy dips, I buy low. And now I feel I'm at a price, which means support. So now I'm on my 15-minute chart or a 5-minute chart, and I wait for that to turn bullish. Short-term bullish in a long-term uptrend. Okay. So that might be what I do today. Maybe it turns into something, maybe it doesn't. Okay. But I wait. It's quite mixed, as you can see. So under this new scoring system that should be developed soon, again, I don't know if I'll have time to yell at them today, but we are adding to this. So imagine this put call ratio was part of these, not six, but now a group of 7 indicators. And this would be a +1 on this list. So if this all adds up, so right, which way? I'm on this one. Sorry. Yeah. So if I'm looking at this would add up to +1. Still not really trending, but this would be a +1 because it's 0.88. Okay. So even it doesn't change anything. It might make this a little bit more bullish. Okay. What we're trying to do is get this data and look at it from multiple time frames. Okay. And then put it on these. So anyways, look, we're bullish long term and it's not happening today. Today is a down day. The last few days might have been a down day, and that's exactly what we want. So now you go to your charts. Okay. So this might be a great opportunity. A -2 day in a +4 world could be the opportunity you're looking for. And now technical analysis will just confirm or deny that. So look at like maybe euro dollar long, maybe. Okay. Aussie dollar long, maybe. Aussie yen long, maybe. Euro yen long, maybe. Okay. Go to your charts, plot in the numbers, make your technical decisions. All right. So I'll see you guys over at the swing trading group. Do you guys want to do that? Do you want to download all the reports and read them? Be for swing traders and day traders over at Investor Bootcamp. I don't want to overburden your morning. Yeah. Anyway, yeah. Right. Just Denise and I. Okay. Great. Sweet. Okay. Cool. So I will see you over there, day traders and swing traders, over at Investor Bootcamp in the swing trading group. Let's meet. In 15 minutes. So what is that? 7:50. Okay. Worst case scenario, we'll get started at 8, but I'll try to start before then. I have to actually go find all the reports. That actually takes time. And I might have to eat breakfast. So why don't we say at 8? We'll start at 8. All right, everybody. So hopefully I'll see everybody over there. Peace on earth. May the pips be with you. May your profits be above average. Cool. See you then. Cheers.